From Harry Hurley Way in the world's playground to the broadcast pioneers of Philadelphia Hall of Fame.
I want to congratulate my friend, Harry Hurley.
You're about to find out why Harry Hurley has been named to the Talkers Magazine list of the 100 most important talk show hosts in the nation. Live from the studios of Town Square Media in Northfield, it's Hurley in the Morning on WPG Talk Radio 104.1.
Ladies and gentlemen, the program behind the program, stimulating, outstanding conversation in the 5-minute break with the president of Town Square. Chuck's laughing at me. I said Trump. With the president, now Mike's laughing at me. With the president of Town Square Media, Atlantic City, Michael Rubel, who's laughing at me because he heard me say Trump. All right, Chuck Malamut is here. You know who he is, kids. You better after 26 years. He is the official financial advisor to the Hurley in the Morning program. Chuck is the managing director. He leads his group, the Malamut Group at Morgan Stanley's Northfield, New Jersey office. You can reach them for all of your financial planning needs at 609-383-2010. And every, typically Tuesday morning, but for the next 2 weeks, it's on different days. Monday this week, Wednesday of next week, but typically we are Tuesday morning with Chuck. And this program is presented by Chuck Malamut, I'm going to say distinguished financial advisor at Morgan Stanley. The information, views, and opinions expressed on this program are those of Chuck. They do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member, SIPC. Chuck, how are you?
Good morning, Harry. I see you're ready to go.
You see me dressed very sharply with my HRH on my cuff, and I'm dressed in a beautiful, I have to say, suit because the lovely Dawn Stensland-Menti is interviewing me about Mr. Trump right when we sign off in a few hours. So I am dressed for the show today, Chuck. I'm dressed like you today.
So, Harry, I'm guessing you had a wonderful Thanksgiving, a great weekend. You and Mike Gill, I listened, did a fabulous job.
That was the best game in forever. It was so competitive, so in doubt, with lead changes. Oh, my gosh, it was just a wonderful game.
Yeah, not to talk football, but it puts Holy Spirit. I mean, that game really puts Holy Spirit in a tough spot. You want to win, you want to compete, you don't want to get anybody hurt because you have obviously a big game the following.
And then, of course, fairly early in the game, their starting quarterback was injured.
Mm-hmm.
And I have to check on that. AJ, if you're listening, or Steve or anybody, I'd love an update. Anybody that knows, tell us the condition of the quarterback. I mean, it didn't look good. I mean, he was immobilized. He was able to be on the sidelines on crutches, but it didn't look good. Yeah, and they have a game.
They have a game Friday,
Saturday.
Okay,
yeah.
All right, great.
Modern day for the NJSIAA state semifinal. So, Chuck, the market update, the Trump rally continues. Say it, Chuck. Say it.
Harry, we oftentimes refer to it as getting on the Trump train.
But say what I just said. Say the Trump rally continues.
The Trump rally does continue,
Thank
Harry.
you.
It looks like today, as we open up, the futures are down ever so slightly, but I don't think it's too terribly difficult to overcome. But if you look, as we got, half day Friday, the market was open. Obviously, we're closed Thursday. So now we've been up 3 consecutive weeks. The S&P was up 1.4%, making all-time highs. Not to be outdone, the Dow Jones was up 1.5%. The NASDAQ was up 1.5%.
Are all three all-time highs right now?
They're close. The Russell 2000, which are your smaller caps, up 2.3%. And they also registered weekly gains for all and marked new record highs during the shortened week that we had because of the holidays. So
I read a national headline story, Chuck, right before you arrived that said U.S. stock futures pull back after record-setting week. The 3 indexes, they're thinking there's going to be a pullback. What do you think?
Well, Harry, you oftentimes ask me, from the time we've been doing this, well, the market hits a milestone, the market gets through a new number, the Dow at a certain level, the NASDAQ, the S&P at a certain level, when you push through those levels, what does that in fact indicate? And I think I would always say to you, Harry, it's typically it's just a number. But I think what is happening here, you have seen an ongoing shift from the relatively safe fixed income bonds. Now, it might be in corporates, it might be in municipals, it might be in shorter term treasuries, but I think now we're at the point, Harry, where we're back to risk on. Where the attitude of this country and the attitude of Wall Street is one of what we can do and what we should do versus what we cannot do. And I'm pretty certain that, look, Harry, as you know, you've been doing this a long time, a market doesn't go straight up, nor does it go straight down. You want to have times where, in this case, I think the market might be slightly overbought because we've had, again, 3 consecutive weeks of solid gains. I'm not sure your listeners would like to hear this, but I wouldn't be at all disappointed, Harry, if the market had somewhat of a small pullback in an effort to sort of, re-gauge itself and then move ultimately higher as we get to the end of the year.
What I've been doing, I'm not ready to, when I say something, I've done my homework and I can back it up. I've started to do my homework, and I want to comment on air just ever so briefly, and I want to revisit this in about 2 weeks. I want about another week after I get back to just finish everything that I'm doing in this regard, because it is going to be a future column. I've written 2 columns to be able to leave for the next week. We wrote a column for this week, which we're very proud of, and we wrote a column about the Electoral College for 2 weeks from now, which equally I'm proud of. And I'm going to be writing a column within the next month about the fact that I have not seen, I'm sure, I don't want to say I'm sure because I don't know. If you haven't seen it, you can't be sure. But I've been researching, Chuck, and I've never seen markets move like this on the promise. Usually, like Reagan said all these things. He was going to lower rates, corporate rates. He was going to, these confiscatory tax rates that were in place. He's going to lower them way down. And, he had this whole Reaganomics theory. The markets didn't immediately go with that. It took 2 years. And then markets roared when we were growing like 1 million in a month jobs and, crazy good stuff was happening. I've not yet seen an example where the election of even a surprise election, if you believe the media, I contest that theory, but if it's out there at such market saturation level, it may as well be true. I've not seen markets change this favorably because of the promise of a candidate in my lifetime.
No, Harry, I think what we are witnessing and living through right now are very, very different times. And I think we need to be I'm going to use the word cautiously optimistic here because, you've worked with Donald Trump. I mean, you've seen Donald Trump in action. Donald Trump, I think, has taken the advice of his inner circle and has done a really, really good job, Harry, in a relatively short time, to become more presidential.
Yeah.
And so
this is true, Chuck. If he would have came out the 3:07 a.m. on the day after the election and given some whack job, acceptance thing, he set the tone from that moment.
Yeah. So the question is, the market. I mean, obviously, you have 2 potential outcomes here. With the equity markets and the fixed income markets. And what I think it gets down to, Harry, is there are just so many unknowns about what we'll call President Trump, because he is the soon to be president of this country, versus the candidate Trump. They could send the market into a direction that we don't want to see. And I think the biggest question in the room, Harry, we at this point in time, we just don't know. You think about it for a second.
But yet markets are happy with what they do know or what they think they know.
But I think, the one thing that we have to be careful of here, is what is the Donald Trump that's going to show up and run this country? if if the protectionist Donald Trump shows up more than the growth Donald Trump, as we think we're experiencing right now, that could have a problem. It should have a problem with respect to the markets. So you think about it. From the time that we elected Trump as a country, and I heard you earlier this morning and heard it over the weekend, and wouldn't it be nice if that $7 million was redirected into charities that really help people? But
it would have been such a difference. Chuck, hold on. Let's get our first break in, because we're not cutting that short, but we have to cut at 8:42 today. We have a national guest that's coming by. He's written a new book about President Kennedy, Target JFK, the spy who killed Kennedy. Wait until you hear what he's uncovered, and he's got documents to back it up. I have to share a post. I was checking during the top of the hour break, what was happening on Facebook, on my page, and any, listeners and friends and folks that were reaching out to me since I signed on this morning. And Margie posted something about a half hour ago. And today would have been her father's 82nd birthday today. But he didn't get there. He didn't nearly get there because he was taken way too young. And let me read Margie's post because it's absolutely beautiful, and I did respond to it. Today my dad would have been 82. He left our young family when he was 48 on a cold and snowy February 14, 1982. He was our daddy. He was my mother's husband. He may have been your uncle, your teacher, vice principal, mentor, or friend. He was an only child and very much loved by his mother and father, aunts, uncles, cousins, and in-laws. He literally saved high school students from getting into trouble that at a young age they would have never recovered from. He taught history, special needs, and was student council advisor, among other things. I have his sense of humor and smile, his light olive-colored skin, the darker hair. He guides me to this day. If I seem overly optimistic, it's because I've married the man my dad always hoped I would find happiness with, and she wrote Harry Hurley. So I wrote, what an honor to read this from my amazing wife of more than 35 years, Margie Finneran Hurley. How's that, Chuck? How nice is that?
Yeah, it's absolutely wonderful,
So
Harry.
you can see why I smile all the time, Chuck. That's because I married well. I married up. We'll be back in 2 minutes. We continue with Chuck Malamut for all of your financial planning needs. Turn to Chuck, the Malamut Group, 609-383-2010. We're back. It's 19 minutes past the hour. You're listening to Chuck Malamut, the official financial advisor to the Hurley in the Morning program. I know, Chuck, we're going to get into the Fed. We're going to get into ETFs.
Right, but let's finish.
And I'm just giving people
okay.
a scorecard, and then some other issues and sectors, that weren't watching and paying attention to. But
so as we chatted about right after the election, the markets have had just a remarkable run. The big stimulus package that Trump has promised, tax cuts, less regulation. I mean, that's really has pushed the U.S. dollar to these incredible levels. And as a result of that, when money is, Harry, money has been moving. Money has been moving out of fixed income into equity. So think about this for a second. The Fed has broadcasted at their next meeting, and we do not have a pizza bet on this, just so your listeners know this. I know that you're trying to coerce me into it, but there is a 90, I think, Harry, the last time I saw it, the projections were there was a 93% probability that at the next meeting the Fed was going to make a move.
Yeah.
Now, the question is, some have coined this as the annual rate increase, and that is in fact true for 2015 and potentially 2016. But the question is, on a go-forward basis, where do we go in 2017?
Let me comment on the first part, though. That's a convenient, not from you. You're just reporting what they're saying. So this is not directed to you. You've been absolutely consistent on this and all the commentary that you do on your show. But how dare they make it look like they weren't planning to do many rate increases within 2016 and make it look like, hey, it's just like we've been saying, this is the annual increase. That is, they're actually being dishonest.
Well, Harry, I sense when I heard that for the first time, I sensed it with a bit of sarcasm.
Yeah,
and still do to this point, to this day, because think about what happened last year. The Fed came in December. They made a move, and at that point in time, there was a 25 basis points or 0.25% rate increase. The expectation was that all interest rates or different product, that being treasuries, that being corporates, that being municipals, Harry, would follow. But at the time, the 10-year Treasury last December was at 2.27% when the Fed took action. Harry, the rate hit, that 10-year Treasury during this year hit a closing low of 1.36%, or 91 basis points, almost 1% lower than the December rate when that first increase was put in place. By the end of the third quarter, that rate, the 10-year, was back to a 160. It increased during the month of October to a 185. And then now, with everything that's happened from the election, we're right now at about a 2.37%.
Yeah.
So that you think about how far the bond market has traveled, and investors that are buying for income purposes only should not, be upset about this.
They're actually going to get yields.
Well, no, I mean in a go forward basis with new cash.
Yeah.
But if you bought a bond last summer,
right,
when rates were lower to the tune of think about it here, 90 basis points to where they are, 90 to 100 basis points to where they are now. The fact of the matter is, when you look either online or look on your statement, or you talk to your advisor, you're going to see the bond, the bond returns or the current value of the bond versus your purchase price, if you bought it within the last 6 months, in negatives.
See if there's any validity to this statement I'm about to make. I believe it, whether you do or not, Chuck. But you and I have had split decisions many times. I believe the Fed is very political. I believe they intentionally did not raise interest rates when they should have, because they wanted to help Obama and then they wanted to help Hillary Clinton. I believe they're going to feel very free to raise interest rates whenever they deem it warranted when Donald Trump is the president. And I submit that almost like a fact, even though I have to say it as an opinion.
Harry, yeah, that is an opinion. I won't necessarily disagree with you, because when you look at where we are with the Fed and in the economy, the economy was slightly improving, before the election. Rates were, as I mentioned just a few minutes ago, were already on the rise as we got into October. But the fact now that Trump's trying to obviously spur growth and makes equities certainly more appealing, even in a rising interest rate environment. So, fixed income buyers and owners need to be aware of what has happened. This is a true testament, Harry, to why you need asset allocation. Mm-hmm. Because if you were on one side of the boat, as we oftentimes talked about, chances are the boat could have tipped over if you own nothing but fixed income, or vice versa, several years ago if you own nothing but equities.
Quick break. We're coming back and matter of fact, we're coming back in just 2 minutes. And then at 8:43, we're going to break for Robert Wilcox, who will join us at 8:45 on the new book, Target JFK, the Spy Who Killed Kennedy. Wait until you hear who he believes is involved in the assassination of JFK. He does acknowledge that Lee Harvey Oswald is in the book depository on the 6th floor, but he has uncovered information, documents, which place another individual in a different location, ground level. We're going to talk, which is what I've always believed. We're going to come right back with Chuck Malamut. He's going to talk about ETFs versus mutual funds. He's going to talk about key issues involving the election and the new administration and sectors that warrant your watching. We'll be back with Chuck Malamut in just 2 minutes. 29 minutes past the hour. That's the great one. Mark Levin. I'm Hurley in the Morning, and you're listening to Chuck Malamut. This is his weekly program all about your financial matters. Typically, if you're new to the program, we do it for the past 25, now 26th year on Tuesday mornings. I don't know that we've ever done one on a Monday. And next week, we're going to be doing it on Wednesday. I will be back for about maybe – I won't sleep that night because I'll literally get off the plane and I'll come into work. That's how it's going to work. And Chuck is going to be with us that day. We also have the amazing Kreskin. That's a week from this Wednesday. Wednesday, December 7th will be my return. We have Don Hurley, Jim Fraser this Thursday, Paul Rotella this Friday. Paul's got a guest list that's just incredible. I know that Don and Jim have worked very hard on their show for Thursday. And then we'll be back on Wednesday live. Chuck Malamut at 8:05. The amazing Kreskin at 9:05, and in a lot of open forum for the 6, 7, and 9 o'clock hours so that we can all catch back up. Kreskin will be on from 9:05 until about 9:20. Chuck, I know you're going to talk about ETFs versus mutual funds, right?
Yeah, Harry, so there's been a shift in the last several years that is showing that what we have grown up to understand, which is referred to as open-end mutual funds, where you are reporting the net asset value at the close of business on any given day. And we typically own them in all of our 401k plans. What is happening now is that Morningstar has recently reported and noted that net outflows of publicly traded mutual funds, Harry, for the first 8 months of 2016 totaled $153 billion that left mutual funds.
Wow.
However, on the flip side, what is happening, exchange traded funds are referred to as ETFs, which trade as the market trades. They trade all day long, and net inflows of about $142 billion, according to that same source. So what is happening, the millenniums as we know them, they represent the largest generation of America right now, about 75 million millenniums. They are more tuned to the ETF structure than any other age groups.
So they're not moving from necessarily mutual funds to ETFs, just an equal amount are trading, but they're actually different people.
So what is happening, where do you
think the mutual fund money's going?
Well, no, so what has happened is the mutual fund money,
is what it is.
The millenniums, a lot of them, the new money goes to ETFs, and they grew up in the mutual fund world, so to speak, and a lot of that money is now shifting into the lower expense ratio type mutual funds,
so new money is
ETFs, I should
old
say.
Money is mutual funds.
Yeah, and so we are accustomed to the mutual fund world, but we're starting. Over the last couple of years, we've been working with our clients and are more engaged in these what is referred to as separately managed accounts and ETFs in an effort to continue to provide not only quality service, returns in excess of benchmark, but very, very competitive fees at the same time.
Do you find that millennials have an appetite for investment?
Our book of business, Harry, we have some. A lot of them, are the do-it-yourselfers, as they're referred to it. They grew up in the computer age.
They're doing it from their smartphone.
They do it from their iPad, their iPhone. And that's all fine. But there will be a number of events that will happen during their lifetimes where they will make absolutely very, very poor judgments and decisions because they don't have the expertise to make the right decision.
Yeah, I think it's very risky, and it's especially risky during challenging times.
And, Harry, you think about it in 2008, the likelihood is that a lot of the do-it-yourselfers, so to speak, got out of the market.
They got wiped out.
What they had, they got out the absolute worst time.
Yeah, they gave themselves half a haircut minimum.
And they said, well, I'll take, if I can get 50 cents out of the dollar, I'll take it. And then what happened ever since is that the equity markets went on an incredible run, up over 200%.
If people didn't panic,
from 2008.
Chuck, is it a fair statement that if people did not panic back in 2008 and then they had the intestinal fortitude, the courage, whatever you want to call it, because it's hard when things are going the wrong direction. There is a sort of a human sort of impetus to want to say, well, half is better than nothing. So let me out. So they got out. They took the half a haircut. Then they insured their losses because they had no chance to come back. Is it a fair statement? I'm not saying that it is a blanket statement, but that in most cases, if you stayed the course, people did come back.
Harry, if the assets were properly allocated, where you did not have a sector where you're significantly overweight that got ultimately beat up during that time, chances are there's a very, very high probability if you stayed the course and you had quality investments, you'd be significantly ahead of where you were back in 2008. And again, the one thing we always talk about, Harry, this is not a sprint. This is a marathon, and it takes years and years to invest and be successful. And did a little bit of a case study. My son, who was a business major, was home over the weekend, and we had this discussion. How he's in a class, and the professor was, they all set up stock trading accounts, and they had so much in play money over a specific period of time, and obviously it was a contest to see who would do better. There were a couple students that just hyperventilated and were trading like every minute, and there's some that put a few trades up and did actually better than the ones that were trading by the minute. And what the professor was trying to demonstrate to the class was the fact that this is a long journey. And the one thing I said to my son, I said, Frank, when you go back, it's pretty insightful. Why don't you, when you have the next discussion about trading, raise your hand and, say, handling money is like handling a bar of soap. And we oftentimes talk about this. The more times you touch it, the higher the probability it's going to disappear. So, and then we took a step back and we looked at some portfolios that we put in place 25 years ago. And it was just remarkable with the performance and what we had accomplished, and the fact that the clients are now, successfully retired, because there's a difference between successfully retired and unsuccessfully retired.
Yeah, meaning working.
And they are now on a path where we have created the wealth where you can pass that through to the next generation. So, pretty impactful weekend for us, for sure.
Very, very interesting, Chuck. And I know you want to talk about electing Trump, the key issues and sectors weren't watching. So
Harry, we kind of touched on this because I know we're running.
We have about 4 minutes.
We're running a little short on time here, but if you think about the policy questions that we kind of chatted about, what's going to affect the economy and on a go-forward basis. So we talked about the fiscal stimulus. The era of the sequester and fiscal austerity, it's over. Federal spending in 2016 climbed to like the all-time highs. It's probably going to continue. Trump, I don't think really has much of an interest at this point in time in shrinking government.
Wait.
I mean, they talked. Let me back up.
Okay.
Shrinking the size of government. He's going to rework it.
Well, let me bring out a couple things that I don't think are jiving with that statement. Trump is doing a hiring freeze, and employees that leave government are not being replaced. So I disagree with that statement. All right,
that's fine. But Trump and Clinton, they both talked about the need for infrastructure.
Yeah,
and the fact that our bridges and highways are in shambles, and we need to commit a lot of capital to make this work.
Because you know what, one day if we don't, we're going to have some tragedy where something collapses and people are just going to be flipping out because they'll be like, "Why didn't you do something?" I mean, we have an aging. These bridges all over the country in all our states are aging and becoming a big problem.
So what will happen is, Harry, don't be at all surprised if you see a bill, presented and passed in the first 100 days of the new administration, where a significant amount of capital will be earmarked for infrastructure. And if that in fact happens, that's going to obviously be a short-term economic boost.
Well, I like that idea.
And it'll benefit not only industrials and materials. We kind of talked about this a couple of weeks ago, the sectors and subsectors that we think will perform well.
Are your financial analysts looking at such things as reinvestment in the military? And that's
absolutely.
That's also
you think about it, aerospace and defense. Yeah, that's another sector.
It's going to be huge. And I think we're also going to see a reinvestment in our space program. I think this administration, I haven't heard Trump say it, but I think this administration understands that us being hostage to however many millions the Russians say the cost for a seat on one of their Soyuz rockets, I think it's an abomination that we're hitching rides. So,
Harry, I agree with you 100%.
So I think that's going to be.
So.
I mean, and now Chuck, with all this spending, this stimulus on one hand is magnificent, but we're also very, very much in debt right now.
So Harry, when was the last time we had a tax cut?
How about
Ronald Reagan?
Yeah.
Okay. So you think about corporate tax reform and how important it is. The fact of the matter is that is certainly on the plate. Trade policy, we've talked about that. We can't really forecast at this point in time what's going to be happening. There's going to be obviously restrictions. I mean, President-elect Trump has certainly talked about that. So
30 seconds.
The things to think about, industries, we kind of chatted about, energy, healthcare, biotechnology, financial services, aerospace and defense, and infrastructure. And I think, Harry, if you take a look at what you own, you might want to look at maybe overweighting those over the next couple of years. And if things materialize as we anticipate, chances are you should have a pretty good outcome.
Stellar appearance, as always. Chuck Malamut. For all of your financial planning needs, turn to Chuck and his team, the Malamut Group at Morgan Stanley's Northfield office, 609-383-2010. Chuck will return with yours truly on Wednesday, December 7th, in the 8 o'clock hour. Until then.
Harry, have a wonderful vacation. Don't think of us too much.
Thanks, Chuck. I kind of like it that I'm here for part of this week, and I'll be here for part of next week. I kind of like the way it's playing out.
We'll bother you over the weekend.
You will.
Thanks,
Chuck. When we come back, JFK biographer Robert Wilcox is next.